Hi, my dear friends. Welcome to Indigo Learn's live session on, I would call it live cast on auditing standards on auditing for CA Inter. We are going to discuss selected standards, but this is going to be an interesting session where we will be talking about quite a few strategic elements in terms of how we are going to approach our CA inter auditing paper, particularly in terms of prioritization and other areas. Like always, let's just wait for a couple of minutes because in the first couple of minutes, we'll have quite a few people joining in. So let's wait for a couple of minutes before we kick off, our uh, live session. So just to set context on what I expect to discuss today, primarily in standards on auditing. If we just touch in an hours of webinar, all the standards on auditing, obviously we cannot do justice, right? So that doesn't do any good to you as well. Just reading out the names and just talking about one or two points there wouldn't really do good to you. So what we're going to do is we are going to do a strategic analysis of the paper, and by doing a strategic analysis of paper, we will make our choices. Hey, hi to everyone. I might not be able to respond individually to you all, but hi to everyone. We will make we'll choose strategic areas and we will do a deep dive into those areas. I hope it is agreeable to all. I'm repeating, I said we will kind of go through the strategic understanding of the auditing paper, where what are the areas where the weightage is more, where the weightage is less, etc. And by discussing, once we discuss that, we will then go into discussing in detail a few aspects which will definitely help you in your examinations. All right. Okay. Hi, Hari. Congratulations. Somebody said he just cleared group 2. All right. Now, let's look at conceptually how our examination pattern is shaping up these days. Concentrate very carefully. I'll see if I can even post some comments from my side. Okay, I will try to post a few standards from my side. I'm just posting a few standards so that there is no confusion. These standards will be for 20 to 25 marks. This is not something that I'm saying. This is something that Institute has indicated. Essay 200, 210, 220, 300, 320, 500 technically they did not include, but when you include 520, 530, without understanding 500, you can't make sense of 520, 530. So that is why I am including 500 as well. So these get tested for about 20 to 25 marks. Okay, right. Now, let's move to the next one. So here we have so here 10 to 15 marks, sorry. So here we have essay 315, 320. They did not include 330, but understanding 315 without understanding 330 doesn't really make sense. So if you understood 315 and also if you understood essay 500, 330 becomes a little more logical sequence or a logical extension. So those get tested for about 10 to 15 marks in our examination. Then let us come to the next area, audit reports. Essay 700, 705, 706. These are getting tested for 10 to 15 marks in our examination. So friends, let's just stop here for a moment. What have we discussed or what did we understand till now? There are 3 chunks that I spoke about. The first one is essay 200, 210, 220, 300, 320, 500, 520, 530. that chunk is getting tested for about 20 to 25 marks in our exams. Then 315, 320, 330. You must be seeing 320 as a commonality between those two. That is right. So 320 in that sense, materiality standard is something important which you will learn across both those, or which is kind of going to be more cross-cutting between these two. This combination will be tested for about 10 to 15 marks in our examination. Then audit reports, primarily essay 700, 705, 706, including 710, 10 to 15 marks. So if we just package these together and look at the weightage in examinations, you clearly have about 40 marks coming from so you clearly have about 40 marks coming from these topics at least, and it can even be about 50 marks. So what I choose to do is I will touch upon some important aspects in standards. If there are any questions, you try to drop them in the comments. If we are able to solve them or resolve them during this conversation, excellent. If that's not happening, then we'll find a way to respond to you later. All right. Now, let's start with essay 315. No, I don't want to start with essay 200. I want to start with essay 315. So what is this about? By the way, friends, this session assumes, I just want to have a little technical check before we move ahead. Is everybody able to see the video clearly? Is my voice clear to everyone? Can you guys just respond? Is the audio video acceptable? Yeah? Awesome. Excellent. Got it. I got it. Okay. All right. So now let's move ahead. We are going to talk about this topic which is giving us 10 to 15 marks. Essay 315. We will talk about part of 320 and then 330. What is 315 talking about? Identifying and assessing the risk of material misstatement through understanding the entity and its environment. Long heading, right? Long title. Very simple, friends. If you want to do a meaningful audit, you should know where the possible risk is. If you want to know where the possible risk is, then you should know the business properly. You should know the environment in which the business is functioning. If you know that properly, then you will be in a better position to understand what risks are there in an enterprise, what risks are there in an audit. If you know what possible risks are there, you will plan your time accordingly, you will do work suitably, and you will address that risk to ensure that the risk is brought down to an acceptably low level. I'm repeating, if you know where the risk is, you can make effort and bring that risk down to an acceptably low level. So here, you need to understand what kind of entity this is, what kind of business are they into, what kind of meaning, is it construction? Maybe construction business has different risk, hospitals has different risk, and pharmaceutical companies have different risks. So what kind of business is it? What kind of ownership and governance structures are there? So what's the holding company? Who are the promoters and things like that? And what is the governance structure? So is there something like a managing committee? Are there board of directors? Who are those board of directors? Then is there an audit committee? Things like this. So how do we make sure, or how is the entity making sure that things are happening properly? So there are remuneration committees, this governance committee, etc. So that may make us feel, I think they seem to be professional. Then what types of investments is that entity making? That is an important thing. So this is a company which is into pharmaceutical sector. I suddenly find they are investing into some cement plant. Why are they doing that? Now that confuses me. That exposes the business to a new risk. If it is a pharmaceutical company which is investing into some labs, okay, there is some other startup which is doing some drug discovery for coronavirus, and this pharmaceutical company made an investment into that, then that might seem aligned to the business. But if they suddenly make an investment which is dramatically different from what the organizational activity is, then it can expose the business to a new risk, right? So this way you understand. Then what are the accounting policies that the company selected? That's an important one, because accounting policies affect the financial statements, correct or not? So when you know that accounting policies clearly reflect the financial statements, yeah, okay, right. So if you, when you know that accounting statement policies directly affect the financial statements, you want to be sure that the policies so chosen by the entity are acceptable, reasonable, considering the kind of business. Then what are entities objectives, strategies, and related business risks? Now why is this important? See, if the company is planning to grow at 10 times every year, so first year if our revenue is 1 crore, next year our revenue has to be 10 crores, the year after that our revenue has to be 100 crores, so every year we want to grow at 10x. Now in a case like that, there is a good chance that the entity has, the organization has pressure to show revenues, and in that process maybe the entity might do some manipulation with respect to revenue. So this is the way in which you try understanding the entity's objectives, strategies, and based on that you also arrive at the related business risks. Okay, now how do we do this risk assessment procedure? First and foremost thing, you want to obtain information from other engagements done for the entity. Then you want to do inquiries of management. Inquiries of management means asking them series of questions which will give you required evidence to say whether entity is performing properly or not, what risks are there, etc. Then information from clients, acceptance and continuous procedures. Now what do you mean by acceptance and continuous procedure? Friends, just because a client comes and asks you to do an audit, you are not duty bound to say, yes, you are asking me, I'll do an audit. No, we don't have any such responsibility. We have a right to decide what we want. We have a right to decide what we want, which assignment we want to do, and which assignment we don't want to do. So, from that point of view, the auditor has a process called client acceptance and continuance. If the client is already our client, should we continue the assignment or not? If this is a new client, should we accept the assignment or not? There will be a process for that. Then you also do observation, inspections, then get information from discussion among the audit team members, and you also do information, you also obtain information from previous engagements. Right, so this broadly gives you a sense of how you get a sense of the, this probably gives you a direction about how you get a hang of the risks which are there in a company. Now let us talk about some internal controls. Somebody is asking about important essays. Well, you can look at the chat that I've already given here. There are essay information that I've already posted here. You can refer to that. Okay, there is some CA 2018. Okay, right. Now let's talk about internal control. When you talk about internal control, my dear friends, please pay attention. What are the things you need to bear in mind? You need to look at the control environment, control activities, then entities, risk assessment procedures, information system, and monitoring. All these might sound like big words, but in our video on SA 315, I have actually broken these down into small scenarios, and with a lot of examples, I covered this. It's a fairly long standard, that way. I encourage, I mean, if you have already done this, this is a revision. If you have not already learned this, then you can possibly refer to those. And I hope you are aware that Indigo Learn, in the light of Corona, stood up as a business with a purpose and business with a lot of student centricity. We have offered a lot of courses for foundation on a free basis, and even for CA subsequent levels, we have offered smaller modules. Wherever you have concerns, you can just go and refer to those. You can get those and refer to those. But this is one interesting standard where we have actually taken a lot of examples to understand what these words mean. Okay, right. So anyway, in terms of internal control, you have to do performance reviews, you have to do the physical controls, you have to check the physical controls, you have to see with segregation of duties, how are the works divided, who is doing what are the information processes, all these things you have to understand. And then you kind of divide the risk into two levels: risk at financial statement level and risk at assertion level. Friends, risk at financial statement level. Did you guys hear about this concept called risk at financial statement level? When I say risk at financial statement level, a risk which affects all the areas of financial statements or almost all the areas of financial statement is what you mean by financial statement level risks. For example, if segregation of duties is not proper, then that is a risk at financial statements level. Then if there are weak internal controls in the organization, then it is a risk at financial statement level. Why do I say so? If the controls are weak in a company, then you can't say it affects only sales. If controls are weak, it might affect sales, it might affect debtors, it might affect the advances what we have given, it might affect even some other areas. So you have to understand the kind of control risks what are there. Similarly, if there are any if there are anything like management overhead of control, this is one important point. When you have something called management overhead of control, then management tries to dominate the controls which are there and use the organizational power what they have to their advantage. So that is one of the ways in which the risks can happen at financial statement level. You need to be mindful of this. Then there are risks at assertion level. Friends, assertions in our learning in our videos, we learn in auditing these this discussion around assertions, where existence, occurrence, right, accuracy, completeness, valuation, cutoff, presentation, disclosure, rights and obligations, these points we discuss. So essentially those are the risks at assertion level. Okay, right. So I try to give an overview of this, and for any deeper understanding, it is good you refer to the video module. Okay, now let us look at essay 320, because essay 315 plus 320 plus 330 is a 10 to 15 minutes, so 10 to 15 marks of priority. So let's look at essay 320, materiality in planning and performing an audit. What do you mean by materiality? Something which is significant. Significant for whom? For the decision maker. Who is deciding whether it is significant or not? Auditor is deciding whether it is significant or not. When is the auditor deciding whether it is significant or not? During the course of audit, particularly at the start of the audit, auditor decides and ascertains the level of materiality and updates that level of materiality as the audit progresses. Okay, right. Now, why is materiality determination important? Friends, we as an auditor are expected to provide reasonable assurance about the financial statements. When I say we are expected to provide reasonable assurance about the financial statements, it also means that we are not expected to provide absolute assurance regarding the financial statements. Meaning, we are saying more or less financial statements are okay. That is what we are committing, or that is the comfort we are giving as an auditor. More or less things are okay. We are not saying things are absolutely perfect. No, that is not the language we are using, right? Why is that so? Because there is something called inherent limitations of audit, which we learn in our essay 200. Because of the inherent limitations of the audit, okay. Guys, let's keep this very professional, and this conversation is expected to do good to all of you for your examinations and the careers that are ahead of you. So let's keep the conversations professional. Okay, right. Okay, now when I talk about audit risk, when I talk about materiality, now materiality has to be seen in the light of audit risk. Imagine in a company, audit risk is high. It's a very risky client. Then what will happen to your materiality? Materiality level will be low. Meaning, materiality, just understand the concept first. It is a level. You're saying below that level, it's okay. It's small, tiny, ignore. Okay. You're saying there is a level. Below that level, it is small, ignore. Small, ignore means what? It is not material for the decision making of the users of financial statements as decided by the auditor, or as judged by the auditor based on the professional judgment. So auditor says, I am convinced if it is below this level, it is not going to materially affect, it is not going to significantly affect the decision making of users. So if I ignore those small unnecessary areas, then we get to spend time on more risky areas in our audits. So that is why we arrive at something called materiality. If audit risk is high, materiality level will be low. In other words, if you are setting materiality level to a high level, it also means that you probably expect the audit risk to be low in such cases, right? How do you decide whether materiality should be high or low? You have to decide that based on qualitative and quantitative aspects. For example, if there is something called planning materiality, the overall materiality, then planning materiality, and summary of unadjusted differences. If when you talk about overall materiality, you take a thumb rule, something like, okay, 5% of profits, or 0.5% of turnover, or 0.5% of total assets, or 0.5% of net assets. Like this, you will arrive at an overall basis and arrive at something called overall materiality. After arriving at overall materiality, then you customize it based on the company specific factors more qualitatively. Meaning, initially we applied a quantitative metric like a percentage on sales or percentage on assets, etc., and arrived at, say, this much number as materiality. Then we actually customize it for the company's qualitative aspects. Like last year, there was a fraud that we saw in the company. Oh, then we cannot say this much is not, this much is okay, below this we'll ignore. No, I think we have to be more careful. If you have to be more careful, then we will reduce the portion of materiality. Friends, I'll just give an example so that you get this concept pretty clearly. Materiality is a very important standard that we have in our exam for our exams. If you want good marks, I know all of you want great scores for your examinations, and if you want great scores, then naturally what you would want to do is the portion that you want to leave saying I'll not study this should be very less. If you want to take more risk, then you will say, fine, I want to take more risk, so I can leave more portion saying I'll not read this. But if you want to really do well, then you want to leave a smaller level of portion, right? So you want to cover rather most of it. So this comes from your required amount of comfort as a student. Same thing you try applying as an auditor. If you want more comfort as an auditor, you want to leave less topics. If you want to leave less topics, you will set materiality at a lower level. Similarly, you will look at the history of company. I said last year if there were some frauds, etc. Maybe in the current year there might be some special cases, like the company did a huge fundraising, so there are some special risks what you expect because of the fundraising what the company has done. Then maybe your materiality level might be low. So like this, you make those suitable adjustments. But please understand, friends, this involves professional judgment. You may use some benchmarks like turnover or total assets or net profit, etc. But still, ultimately, who has to decide whether the materiality is okay or not? Auditor will decide. Okay, right. Now, once you set the materiality, as the audit progresses, you will keep revising. If there is a need to revise that materiality, you can revise the materiality. No problem at all. Because maybe there were some circumstances which we did not know as an auditor when we started the audit. We got to know about those as we started doing the audit. So in such cases, we might revise the materiality. We will document the materiality at the start of the audit, at the planning stage we call it, and during the course of audit, we subsequently update it. Okay, right. Now, what is SA 330 largely about? You identified the risks. Now, for those risks, how do you want to respond? I will not touch upon SA 330 in detail. I will just mention it and leave. I'll mention it because it is technically excluded or it's not really of relevance for us. Auditor's response to assessed risks means if you see problems, what should auditor do? While the standard technically is considered excluded, you will have to perform the procedures as per audit comfort bucket. Now, I just want everybody to, some of you probably haven't seen this audit comfort bucket. So I'm just drawing an audit comfort bucket here. I'll show you and you can have a look at this. Okay, right. Okay, right. Now, concentrate carefully, friends. So here in audit comfort bucket, we are primarily saying, see, in Corona times, the way we learn and the way we think about learning is significantly going to change. So, well, I'm excited like you to see how life takes us in these times. So in this, I'm just calling as audit comfort bucket. Whether you find it as a bucket or not, still accept it as a bucket. Thanks, Surya. Okay, now he thinks I'm more stylish than what I am. Okay, while I don't know what I have specially done for it. Now here, these two things, we call them as compliance procedures. These two, we call them as substantive procedures. Okay, right. Now, friends, concentrate carefully. In compliance procedures, the bottommost one is test of compliance with laws and regulations. Test of compliance with laws and regulations. The second one is test of controls. Test of controls. Then this one is substantive analytical procedures. Friends, substantive analytical procedures we learn as a part of SA 520. Okay, right. And this is test of details. We learn about test of details in essay 530. Okay, 520, 530 technically are applicable in our curriculum, and compliance procedures, test of controls is also there in our curriculum. So I don't understand what we mean by essay 330 not being big, significantly relevant and all. So be fairly clear. Essay 330's essence is making sure after identifying the risks, you perform audit procedures. What are all these, by the way? All these are called audit procedures. Audit procedures, test of compliance with laws and regulations, law test of controls, substantive analytical procedures, and test of details. Okay, now pay attention, my dear friends. So we are saying there is an audit. When you want to start the audit, you have to have an objective clear in mind. What is the objective you want to have clarity on? The objective is to express an appropriate opinion on the financial statements of the entity. How do you express an appropriate opinion? Based on the evidence, what you get, and the comfort, I will call it as comfort, what you get from different areas of financial statements. Okay, right. Now, how do you get comfort or discomfort regarding different areas of financial statement? You get the comfort or discomfort based on the audit work, what you do. We call them as audit procedures. What do you mean by audit procedures? Just now we saw audit comfort bucket, test of control, substantive analytical procedures, test of details. All those things are basically called as audit procedures. You perform audit procedures. So why do you perform audit procedures? You perform audit procedures to obtain audit comfort. I'm repeating, to obtain audit comfort. What is the meaning of audit comfort? A comfort is basically you're saying, now I am more confident that the financial statements are free from material misstatement. Friends, I'm also getting messages constantly asking for, on my mobile, asking for sir, please give a breakup of examination pattern, etc. And there are few people who are asking me what is expected to happen in corona times. Okay, as if I know, I'll still make some intelligent guesses, right? But we will do it towards the later part of our learning, not now. So maybe in the last 10 minutes we will spend towards the expected breakup of not just two three things, but our entire examination paper. What are the expected what is the expected breakup, that I'm going to talk about. But hang on, concentrate on this. We are talking about an important topic now. So here we said we have to perform audit procedures to to obtain a sufficient comfort. These procedures we saw just now, we saw substantive analytics, test of details and all. These are called audit procedures. You will perform procedures only after you obtain evidence, right? So on what will you perform test? If you want to do some tests, you need to have some data or some raw material. On that you will do some test, right? So that way, what is the data that you get or evidence that you get, that we call as that is basically the audit evidence what we get. We, to get the audit evidence, we use something called audit techniques. We use something called audit techniques. Yes, some common man, IPCC breakup weightage, I'll talk about it. Please concentrate on what we're discussing. I will talk about the breakup and all towards the last 10 minutes of our discussion. So hang on. Now, this entire process we call as audit flowchart. obtain evidence using audit techniques, examine that evidence using audit procedures, ascertain whether you got sufficient comfort or discomfort. Based on that, you form an opinion, and that opinion is formed with a thing in mind that our opinion, our view on the financial statement should be reasonably the actual view that is there in the financials. Sorry, I'm repeating, our objective should be to express an appropriate opinion on the financial statements. So whatever we express as an opinion should be as close as possible to what is the reality. That is our effort. I'll simply call that is our effort. Okay, right. Now here we will talk about this last part. We are doing all these things to express an opinion on the financial statements. Friends, more or less a standard question in the examination is around the type of opinions and the drafting around those. Okay, I'm repeating for CA Inter, CIPCC, PCC, CA Inter, whatever you want to call it. One of the standard things that gets tested is the one around audit reports. Let us do some amount of reading about, rather understanding about audit reports. What do you mean by an audit report? An audit report is the, I would say, the paper on which the auditor expresses his or her opinion on financial statements. Okay, right. So auditor expresses opinion on financial statements through audit report. Now, this audit report, please pay attention, can be of different types. This audit report can be clean or unmodified report. Clean opinion in an unmodified report. People use opinion and report synonymously. They are not synonyms. Please use them separately, carefully. When I say reports, there are two types of reports: modified report, unmodified report. Modified report, unmodified report. Unmodified report means there are no problems. That is why we are giving an unmodified report. Modified report means there is something. Okay, so what is the thing we will talk about later. Modified report means there is some issue. Okay, we will talk about what that issue is. So when in an unmodified report you give an unqualified opinion or a clean opinion. Friends, please get this right. In an unmodified report you give an unqualified opinion or a clean opinion. When do you give a clean opinion? If whatever management was supposed to do, if they have done, then you can give a clean opinion. What do I mean by that? Making sure that financial statements are prepared in line with the accounting standards and applicable laws and regulations. Then maintaining proper books of account, having appropriate internal controls, having checks and balances to prevent and detect fraud and errors. Then having appropriate accounting policies, choosing appropriate accounting policies, and so on. So all, and prepare for, of course, finally preparing financial statements and presenting them. So all these are the responsibilities of management. So friends, my point here is, if whatever management is responsible for doing, if they have done, then we can give an unqualified opinion in an unmodified report. Is everybody clear about the language? You give an unqualified opinion in an unmodified report. Okay, excellent. Now, this report, whatever we are giving, let's talk a little further. If you are giving an unmodified report, nobody will ask you. If I simply say good, right? So you wrote an answer and you showed it to me. I said, okay, good. You will not ask me, why is it good? What is so good about it? Why the hell did you give me a compliment called good? No, you wouldn't probably fight with me. But imagine you give me an answer to verify. I say, not good. Will you ask me why? Of course you will ask me why, right? So that's our modified report. So when you come to a modified report essentially has some locha. Now what is that locha? We will talk about. Modified report can have three types of opinions. The opinions could be qualified opinion, disclaimer of opinion, adverse opinion. Let us please understand exactly what type of opinion will be given when. I want to know from you guys. This is a question to you. In the live chat, you can respond. When does an auditor give a qualified opinion? Everybody can respond. Yeah. When does an auditor give a qualified opinion? Anybody? No material misstatement. If there is no material misstatement, then why do you give a qualified report? Subject to conditions. Subject to conditions. Not true and fair at all. When there is material misstatement in financial statements, okay, are persuasive. Material misstatements. Okay. Any more? 30 seconds. Last 30 seconds. When does an auditor give a qualified report? When the financial statements are conformity with books of account. Qualified opinion is given when there are material misstatements which are not persuasive. Okay. There are some material misstatements. In case major not received confirmation, which are persuasive. Okay. Right. Good. Done. We are done with the time. Okay. We are done with the time. Okay. Thank you. Now, my dear friends, just look at this. Very simple. We are trying to draw 4 boxes. Okay. Right. The first one is about, is it I mean, there is a problem. So there is a problem and there must be some seriousness for the problem. Right. So what kind of problems are we talking about? There is a material misstatement. There is a material misstatement remaining uncorrected or remaining in the financial statements. Okay. Right. Then there is some information which we are not getting. Restriction on the scope, limitation on the scope of auditor, restriction on the scope of auditor in obtaining information. Please concentrate very carefully. Now please don't make any more guesses. Answers have to be very crisp. These are not our BCom answers where we can write for pages and pages and examiner measures your answers based on the number of grams and gives marks. No, these are all qualitative answers. So you have to be to the point and very sharp and crisp in your answers. Please concentrate, friends. Please don't give any guesses now. Pay attention. So, material, there is a material misstatement. Okay, there is a material misstatement. Then some information we have not gotten. So, I'll call it limitation on the information that we have gotten in the company. Means we didn't receive full information. Material misstatement means there is something wrong. Okay. This might be having some impact, overall impact. Are you able to see when I'm showing this? Are you seeing the text properly or is it in a mirror image? Just curious to know. Are you able to see the text properly? Okay, great. Awesome. Stop. Right. So, is it some impact or overall impact? There is a material misstatement. That material misstatement, okay, I am just moving it a little closer. That material misstatement, if it, okay, got it, guys, got it. Thank you very much. Move to the left. Okay, right. I don't know what that means, but let me try. So, listen, material misstatement, please concentrate now. No more responses here. Material misstatement, which is, when I say material misstatement, it is an error or some problem in the financial statements, which is significant. It is significant, but not overall. It is significant but not overall. Then I call it some impact. Okay, some significant impact but not overall impact. Similarly, limitation on the scope of auditor, where the auditor could not get information. Whatever auditor wanted, auditor could not get that information. It is not that auditor did not get overall information. Significant portion only auditor did not get, but it is also not that overall auditor did not get. So then it comes under this category, meaning there is a material misstatement, but such material misstatement does not have an overall impact on the financial statements. It does not have a persuasive impact. That word somebody was using there, persuasive impact, sorry, pervasive impact. Pervasive impact means overall impact on the financial statements. So it doesn't have it doesn't have a pervasive impact on the financial statements. Here, limitation on scope. Limitation on auditor scope of work, where our information that we normally should have received is curtailed, is not received, but it is not received regarding some areas. It's not about, oh, overall we did not get anything significant. Okay, right. In these cases, we give a qualified opinion. The auditor issues a qualified opinion. Okay, right. So qualified opinion will be issued by the auditor in two cases. What are the two cases? Because nobody was talking about two cases. Everybody was just giving one scenario. Or the qualified opinion will be issued in two cases. One, when there is a material misstatement in the financial statements which remains uncorrected, which has impact which is not pervasive, which does not have a pervasive impact. That's what I mean. And the second case is there is a limitation on auditor scope of work placed by the management, which is material but has a limited impact. Please understand, friends. If you want to call something as a problem, if you want to call something as a problem which is going to change the audit report, okay, if it is that, if you're talking about that kind of a problem, then that problem has to be material. That problem has to be material. So let's talk about one example. Let's talk about this case. Okay, right. So when you talk about qualified here, the company for whom we are doing an audit, in that we found that there is a violation of accounting policy. I'm giving example, please hold on. There is a violation of accounting policy. When there is a violation of accounting policy, auditor said, hey, this is wrong, this is a material misstatement. I know that it is wrong, because there is a violation, deviation of accounting policy, accounting standard, etc. Now the company said, there is a violation. So auditor checked. Yes, the violation is only regarding fixed asset. It is not regarding all other areas of financial statements. It is affecting some areas, not overall. Okay. Then the auditor says, "ठीक है." So it is material. So I have to give effect to that in the audit report. It is not overall. It is material but not overall. So then it comes into a qualification. Right. So auditor may say, except the impact of this much on the financial statements, rest of financial statements are true and fair. Okay, right. I will talk about the drafting of that paragraph in a moment. Just hold on. Now come to this scenario. Management did not provide auditor with evidence regarding fixed assets what they acquired during the period. Maybe the company acquired a lot of fixed asset and they haven't shown the fixed asset registers and fixed asset details to the auditor. Auditor says this is material, but also it is not overall. It is not too significant. It's not so much that yes, the auditor is not saying if you don't give me this, then don't give me anything. Giving anything else is worthless. It is not that significant also, but we are saying it is fairly significant only. It is not overall, but still important. Then auditor may give a qualified opinion that we did not get information regarding fixed assets. We don't know what would have happened had we gotten the information regarding fixed assets. Like that, auditor will give a qualified opinion. Now come to this one. Material misstatement having an overall effect. Here we give something called, anybody? What do we write here? If there is a material misstatement which has overall impact, what type of opinion will we issue as an auditor, friends? What type of opinion do we issue as an auditor? Any guesses? Material misstatement having pervasive impact. Adverse. Awesome. You guys are all genius. Adverse. Okay. Adverse opinion is what we issue. Adverse opinion means there is no need to talk any further. Oh, it's not disclaimer, my friends. It is adverse opinion. I'll talk about it. Concentrate carefully. If from this 1 hour of video, if you have understood the concept of audit reports perfectly, you can be rest assured about 10 marks you have pocketed for your examinations. Okay, right. Concentrate. Here, what is the meaning of adverse opinion? Auditor says there is a material misstatement. That material misstatement is very significant. It is so significant that overall the financial statements, I cannot say they are true and fair if this is the kind of problem that is there in the financials. Like the company did not follow accrual basis of accounting. Why? For fun. For fun, they did not follow accrual basis. They thought, hey, every year we are following accrual basis. For some time, we'll follow cash basis. Joker followed cash basis of accounting. Auditor got angry. Auditor said, I will now issue a modified report. In that modified report, what kind of opinion is the auditor giving? Auditor is giving an adverse opinion because auditor says if you have not followed the accrual concept of accounting, then the impact of that is significant. When the impact is significant, so significant that fixed assets affected, sales affected, purchases affected, inventory affected, are a life fully affected. Okay, so if life is affected to that extent, then let us just call it adverse. Let us not call it qualified. Okay, so basically this, if it goes into high degree, then we are calling it adverse. That's all. Okay, right. This material misstatement, some level qualified, more than adverse. Okay, right. Now come to limitation on scope. Client did not give us information regarding fixed assets. Here we said, except that everything that we don't know whether it is okay or not okay, but others are okay is what we said, and we gave a qualified opinion. Obviously, we don't have an option. This has to be disclaimer of opinion, right? Now, this has to be disclaimer. Now, listen carefully, friends. When do we give a disclaimer? When we give a disclaimer when the auditor says, you as management did not give me information which is so significant that all other information what you gave me, that also you take back. Okay, that also you take home. So I'm just repeating, right? The client did not give auditor some important information. Auditor feels that the information which the client did not give the auditor is so important that whatever client gave, auditor says, ले जाओ भाई ले जाओ, मेरे को इससे कुछ काम नहीं आएगा, this is useless to me, I cannot decide what opinion I want to give based on this because I cannot form an opinion. Why? Only fixed asset information we have not given. The auditor says, my dear hero, the balance sheet total is 100 crores. Fixed assets are 93 crores. And fixed assets you are not giving, and you're saying 7 crores, all other assets I'm giving. That also you keep with you. Don't give me those assets. Because I mean, even if I see those 7 crores, I cannot form an opinion on whether financial statements are okay or not okay by not seeing 93 crores worth assets. I hope you are getting a sense of what what we mean by this. So friends, when we give a disclaimer of opinion, primarily the auditor says, hey, I am giving disclaimer of opinion because I am not able to form an opinion on the financial statements. I am not able to express an opinion. I am not able to form an opinion on the financial statements. So here, without doing audit, just imagine, without doing audit, you ask somebody, I haven't started doing the audit, you ask me, what is your opinion about the audit of financial statements of Infosys? I'll be like, I don't know. How do I know? That's exactly what I would say. Now I have done the audit. Maybe that company did not give me some significant information. Then I'm coming out and saying, I don't know. I don't know whether to listen to this or not. Okay, right. So I don't know whether to listen. Sorry. Yeah. So I was just checking if there is anything significant that is going on in the chat. Right. So the auditor says, I don't know. like the same answer the auditor would have given before starting the audit also, right? The auditor is giving the same answer even after the end of the audit, because the auditor says the information which is required for me to form an opinion is not given by the client. If such information is not given, then the rest is worthless. So I will not express any opinion. I'll say, I don't know what this information is. And the auditor says, hands up, you figure out. I have no idea what to make out of these financial statements. Then the auditor gives a disclaimer of opinion. So again, friends, just you see here, limitation on scope. If there is some impact, qualified, but significant impact, it is going into disclaimer of opinion. Okay, right. Now, there are also two other small points relating to opinions. Of course, they're actually not a part of opinion, but they are called paragraphs in the audit report. These we learn as a part of essay 706. What is essay 706 going to talk about? Two things, friends. First one is emphasis of matter paragraph. The other one is called other matters paragraph. Please pay attention. If you concentrate for 2 minutes, you will understand the standard properly. In emphasis of matter, the auditor says there is a paragraph already in the financial statements. There is a paragraph already given by management in the financial statements. Please check that carefully. Please check that carefully. Why do I want you to check that carefully? It is a very important paragraph what management has given in the financial statements. So please check that carefully. That is what the auditor is saying. I am not qualifying my opinion. I am not giving a negative opinion here, but I am asking you to check that carefully. Why is the checking so important? Why are you emphasizing on it as an auditor? You are emphasizing on it because if that paragraph that management gave in the financial statements is missed by the reader, then reader may take a big decision without knowing a very significant piece of information. That is why auditor is emphasizing. It's something like this. Say you have a highlighter, right? And you're taking that highlighter and you just see, okay, so here I have a highlighter and I'm taking that highlighter and just highlighting these, right? So I'm taking the highlighter and highlighting whatever I'm seeing here, saying, ha. Now, what is the meaning of highlighting? Listen, to highlight something must already be existing, right? So here on a blank slide, if I'm highlighting, it doesn't make any sense, right? If I'm highlighting here, then it means, oh, I want to draw your attention to this point, then I am highlighting this, right? So then you're like, what is that? You will be tempted to go and read. Friends, this is done by auditor whenever auditor believes that there is some important information that is there in the financials which the users cannot afford to miss. See, come on, let us be honest. In our auditing notebook or every notebook, there will be so many points. We read some, we tend to skip some, right? Because we are extraordinary people, we make some beautiful judgments. We read some and we skip some. Here, the auditor is basically trying to tell the user, my dear friend, as a well-wisher, I'm telling you, do not miss that. If you miss that point, then you are missing a very big thing in the financial statements that you are understanding. Okay, so that is the point what you have regarding emphasis of matter. But please understand, friends, when we say emphasis of matter, this is not qualification. This is not adverse. This is not disclaimer. What are we saying? Our opinion is not affected. I might be giving a clean opinion. I might be giving an unqualified opinion, and still I might be giving an emphasis of matter. I'm repeating, friends. I might be giving a clean opinion and still give an emphasis of matter. I might be giving a qualified opinion, plus I might be giving an emphasis of matter on some other point. So emphasis of matter can be like a tail along with a qualified opinion, an unqualified opinion, disclaimer of opinion, adverse opinion, whatever, right? So emphasis of matter can be an extension, a tail, along with any other opinion what the auditor is providing. Okay, now the next one, other matters paragraph. When you talk about other matters paragraph, primarily other matters paragraph is about cases Okay, emphasis of matter, I'll just give one example and move on to other matters. Say there is a significant legal case filed against the company. There is a note regarding that. If the company loses the case, company has to pay some 100 crores. And company feels, no, we'll not lose the case and all of that. So they gave a note in the financial statements. Auditor is drawing your attention to that particular point and saying, please read that. It's important. So that is what I mean by emphasis of matter. Where will the auditor give this emphasis of matter? Auditor will actually not take a highlighter and highlight in the notes to accounts. Auditor will give a note in the auditor's report saying, hey users, go and refer to that point number 7, which is there in the notes to accounts. It is important for you to understand the financial statements. Like this, the auditor can emphasize. Then let us talk about other matters paragraph. What is the meaning of other matters paragraph? There is no note in the financial statements currently. Auditor wants to tell this to the users because auditor feels it is important. For example, we are doing only branch audit, but overall company audit is being done by someone else. Then maybe I want to tell the users, hey, this is my responsibility, right? This is my responsibility. I'm a branch auditor. Similarly, I'm the company auditor. I did not do the audit of every branch. Branch audits have been done by branch auditors. I relied on the branch auditor's report to form my opinion. So in such cases, the company auditor can give a paragraph in the audit report under other matters saying, hey, I relied on the work of other auditors. Based on the work of other auditors, I formed my opinion. Like this, the auditor can give a paragraph called other matters paragraph. So friends, essay 706, which talks about emphasis of matter paragraph and other matters paragraph. Remember, can emphasis of matter paragraph and other matters paragraph, can both of them exist in a same company? Yes. In the same audit? Yes. Both can be there. Second, can qualified opinion plus emphasis of matter exist? Yes. Can adverse opinion plus emphasis of matter exist? Yes. Can unqualified opinion plus emphasis of matter exist? Yes. Can unqualified opinion plus other matters paragraph exist? Yes. So, emphasis of matter paragraph and other matters paragraph can go as a tail along with any remind some of our friends who came in late also about the points what I mentioned at the start of this particular webinar class. Essay 200 plus 210 plus 220 plus 300, 320, 500, 520, 530. That combination will give 20 to 25 marks. I am just giving that once again here. Okay, right. Then we have, there is one more, of course, I did not talk about this earlier, but now I'll talk about it. Then there is essay 230 audit documentation, 500, 501, 505, 510, 550, 560, 570. This combination gives about 5 to 15 marks. This combination gives about 5 to 15 marks. Then we have company audit, then essay 240 regarding fraud, then CARO. These generally give about 20 marks. Okay, 15 to 20 marks you can call it. Okay, so 15 to 20 marks, generally more towards 20 marks you can get. Then audit reports. Just now we discussed about audit reports. Audit reports, you will from audit reports you can expect 10 to 15 marks in our examination. Then audit of financial statements. Audit of financial statements, basically this we earlier called it as vouching and verification chapter. So this audit of financial statements is something which is for 10 to 15 marks. Then there is another topic, audit of these are all these different audit of different entities. Okay, so different types of audits, I'll just call it. So this will be for 10 to 20 marks. Okay, just to give you an overall sense of how our marks weightage in the examinations could be there. Okay, now friends, I of course Audit of banks will be included in the audit of different types of entities, Amal. Okay, right. Audit of banks will be included in the last one, different types of entities, and including audit of banks. Right. Now, friends, please pay attention for 5 minutes. We as a humanity are going through an extraordinary moment. World will not be the same after Corona, COVID-19. We are probably, I would say, a lucky generation which is going to see the other side if we take enough care. We will be the unlucky generation if all of us, each and every one of us, even if one person does something which is silly or stupid, most of us or many of us might suffer. So this is a defining moment, one of the most defining moments and great choices what we can make, in our capacity, where our choices might affect hundreds of thousands of people, good choices or bad choices, right? So I urge each and every one of you to remember that this is not a time to show your extraordinary brilliance or your strength, saying, "Sir, I'm a very strong person. Nothing will happen to me. No viruses will affect me. I'm too strong a person." Congratulations. I believe in that, but this is not the time to test. Let COVID 19 be over, then we'll play this game. Okay. But now is not the time to show your strength, do all this testing. Please respect the situation that we are in, and being at home and trying to respect the situation is one of the greatest gestures you can show to the country that you belong to, right, that all of us belong to. So please ensure that you do the needful. Secondly, there are a lot of people who keep saying, "Sir, these are the things which affect," I keep getting these messages, "Sir, these are the things which affect the people in big cities, not in small cities or villages, etc." My dear friends, we have had about exactly 100 years ago, in 1918 to 1920, about 60 lakh people, 60 lakh people in India died, unfortunately, because of some negligence in crisis moments like this. We all collectively should ensure that nothing like that ever happens. So for that, please be responsible. And I mean, we at Indigolan are 100% committed to ensuring that you get quality learning. The institute, amendments, notifications, whatever come through our app, we are notifying. Those of you who don't have the app, just download the OneFin app, and you can subscribe to some courses, whatever you want. So we went ahead offering even the courses which you just want. Like, say, if you want some part of the curriculum, you have a choice to pick up and learn only that part of the curriculum. So we at Indigo Learn, I'm repeating, are committed to this philosophy of students first, and we want you to be happy. We want you to succeed in your examinations. Also, we want you to be safe. All right. Thank you very much. I really enjoyed this interaction with all of you. Please share your comments. Maybe I'll just wait for 2-3 more minutes. You can share your comments, feedback, and how you found it, and any other suggestions that you have, etc. Feel free to post those, uh, in this comment section, and then maybe in 2-3 minutes we will sign off. Thank you all. Bye bye. You can give your feedback on how you found things, what could be better, what could be different, etc. You can just share your thoughts on how you found the session in the comment section. Yes, Sricharan, it is available. It's going to be made available in the YouTube. Rahul, there is no question. It's not about my class or anyone else's class. If Indigolearn is airing a content and asking you to subscribe to that faculty, the QC quality check about whether that faculty will do justice to you is something that the team would have already validated. Okay, so if there is any course offered by Indigolearn, you can just go ahead enrolling. Okay, all right. Um, there are some more exam. No, no. Jibin Thomas, why do you think exams will be tough? Because just because they are postponed, there is no reason, or there is no reason to believe that. Okay, exams will not be tough just because they are postponed. So these are all rumors. You have to focus on your preparation. If you are a batsman, you have to think of how you have to prepare. You shouldn't think too much about what bowler is doing. You have to make yourself more and more equipped to face any challenges. That's all you can do. So don't over plan, don't underestimate. Okay, right. I'm very confident all of you will do exceptionally well, and we'll again meet. Definitely, I'm sure there'll be more sessions like this that we will do over weekends, and I'll get to meet with more people like you. um, Amal is asking this question, sir, whether test of controls and substantive procedures are types of sources of audit procedures. I didn't understand what you mean by sources of audit procedures. I would say those are types of audit procedures. Okay, those are the types of audit procedures: control test, compliance testing, and substantive testing, or compliance procedures, substantive procedures we call them. Those are types of audit procedures. Okay, all right, guys, thank you very much. Love you all, and have a great time at home. Stay safe. Bye bye.